It's about that time of day again, folks. Welcome back to Nightly Newsletter, boys and girls. Joseph James here. It's Tuesday evening, June 28th, 2016. Markets are clearly getting back into their rhythm this week after being shaken up by the Brexit vote last week. We have some excellent trading opportunities going into tomorrow's session. Crude oil and the S&P are bullish at the highs of their ranges, while the gold and euro are still a little bit chopped up, but very bearish looking into the short term tomorrow. Got a busy newsletter in store for you guys tonight. A lot of great strategies going into Wednesday's trading session. Before we jump into our charts, check the schedule for tomorrow and put together those strategies. I do want to remind you the only place to watch the full-length version of this video is here on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, don't forget there's a link in the description of the YouTube video. Follow that link, come over here and join me on the blog, and check out the full-length version over here at sidewaysmarkets.com. While you're here watching, don't forget to grab your free pass as a guest to come out and join me in the trade room as a guest this week or next. Register for the mailing list in the lower left-hand corner. I'll send you an email every evening when the nightly newsletter is ready to go live. And of course, download the charts below tonight's video. That way you can have all the charts ready for tomorrow's trading session. And as always, I get lots of questions about what it feels like to be a member here at School of Trade, right? How we trade, why we trade, what we're all about. You can join the trial membership over on the right-hand side of the website. And of course, don't forget, I'm always here standing by 24/7, 365 to answer all your questions. Hope you guys are having a great week so far. Felt good today. Market's starting to get back to their normal tricks again. A little bit shaky still in the euro and the gold, but I think that was to be expected. Let's first start out tonight by looking at tomorrow's schedule, and then we'll look at the charts here for crude, S&P, gold, and of course the euro. Tomorrow's Wednesday, June 29th. Don't forget we are going into a holiday shortened week. There is the Independence Day holiday this coming weekend. Of course, July 4th is next Monday. That's a big holiday here in the US, and so we do expect the volume to be deteriorating come Thursday afternoon into Friday. We'll talk more about that in tomorrow's newsletter. We get some minor news out of Japan tonight. If you're in the Asian session or the Australian session, we get some minor news coming out of Japan, 7:50 p.m. Eastern time this evening. That's not that big of a market mover. We won't see any major news until we have the nationwide home pricing index at 2 a.m. tomorrow morning, and then, of course, the economic sentiment out of the EU tomorrow morning late in the London session. If you're here with me in the U.S. session, we have some news from Germany, the CPI at 8 a.m. tomorrow morning from our good friends in Germany. We get 8:30 news, personal income and outlays, pending home sales at 10 o'clock, and then, of course, you know what a Wednesday means. It means, of course, we're dealing with crude oil inventories. Whenever we have an inventory news, of course, applying to crude oil, we also know there might be a bit of an impact there for the S&P 500 tomorrow as well. Trade around that news. I always cut it off about 10:15 on Wednesdays for the crude market. Everything else should be just fine. So again, minor news tonight. Coming out of Japan, tomorrow morning in Europe, we've got news from Great Britain, we have news from the EU, we have news, of course, from Germany, and of course then going into the U.S. session, 8:30, 10 a.m. The big news tomorrow for crude traders, 10:30 a.m. Eastern time. Don't forget, if you're with me tomorrow, we'll be opening up our trade room and trading these tomorrow morning live in real time at 8 a.m. Eastern Standard Time. You guys know the schedule for tomorrow. Don't forget, holiday weekend coming around the corner. Better make your plans here, right? Always sneaks right up on us. Let's go crude, S&P, gold, and then we'll do a little bit of the euro this evening, getting ready for tomorrow's Wednesday session. Crude oil is bullish and trading at the highs of the channel, completed a measured move target this evening. The buyers had complete control for the entire session today, starting with the bull spike in channel that pulled back into the correction zone at 47 even before running back to the retest the highs to finish the session this evening. The bulls completed their objective by reaching the high of the major bull channel and the measured move. Anytime we have the market achieving an objective, we expect to see profit taking and counter trend traders entering the market in the opposite direction. Based on the strength of this bull market, we know the most reliable buying opportunity will come after a two-legged correction back to prior areas of support for another leg higher. Sellers, you guys got to be patient tomorrow until we can get a new lower low and then hold a pullback before trying to sell this market tomorrow. And your target, of course, the downside is back to low of that bull channel. As you can see, the day started out here today, nothing but bullishness with a nice, strong bull spike and channel. We'll change the color on that. Nice strong bull spike and channel. That spike and channel gave those buyers a perfect opportunity to buy the pullback back to the correction zone. And as you can see here, the bulls did not waste any time getting priced right back to retest the high, right? That's their objective, is to get back and retest the high. Not only did they retest the high, but as you can see here, we also, of course, got the AB equals CD measured move target achieved. That's a major objective in the market this morning for the bulls. And of course, we're up at the high of the larger bull channel. With this amount of bullish strength right now, combined with the fact that we've already achieved all of these short-term objectives for the bulls, we're expecting to see some profit taking from the buyers, and I would imagine there'll be some bargain hunting here for the sellers. That tells us look for a two-legged correction back to an area of support, followed by, of course, sellers trying and failing, and a retest back at that high. If we do get price to keep pushing higher here, I won't be surprised, but it does mean that we have to focus on trap lows. We don't want to buy the high, but if it does break and run higher here, though, just be careful trying to buy too aggressively into those highs. What I always try to do is when it pushes through an area of resistance like this, wait for the pullback, make sure you have enough room on it, and then try to wait patiently for that trap low and then buy it up. Those will always be the most reliable ways to buy if this thing just keeps pushing higher. So scenario one for the buyers, break out, pull back. Be careful with that breakout pullback. It's likely going to be a trap. Wait for that trap to trap out those aggressive buyers, and then that's going to be the most reliable trade. Will be after a trap low as we push higher. Obviously, most reliable trade, we'll wait and see what the price action looks like. If it pulls back here, obviously, that's the more reliable trade here in the short term. Is going to be that two-legged correction back to a prior area of support, such as 47.79. And then when we do get those two-legged corrections, just like we saw back here, right? We saw that deep correction. Look for that seller failure, and that's going to be the more reliable way to buy this back up. Now, of course, sellers, that's exactly where you need to hold that pullback. If the sellers can get a new lower low and then hold the pullback, their target now, of course, will be down at the low of that channel and then possibly down to that 47, 46, 83 area. But be aware, as this price pulls back in this bull channel, we do assume there'll be more buyers waiting to buy that low. And remember, as we pull back to the low of a channel, buyers are looking for sellers to try and fail to buy that low. That may also come down here, right? We may see the price a little bit further, right? Buyer buying into that seller failure at that area of support. As you can tell right now, very, very much bullish. It's either going to be breakout pullback to new highs, two-legged correction back to, right, to double up that measured move, or if the bears can hold that pullback, they'll be hunting for the low of the channel, and then of course a little bit harder, we'll be getting down to that 47 to 46.83 area. And again, until we can really get in stable of this 46.83 area, you have to assume buyers are going to continue to try to catch sellers on the wrong side of the market and buy that dip back at the low of that range. Relatively easy plan on crude. We'll open the trade room tomorrow morning at 8 o'clock Eastern time, and we're going to do this all together. Moving forward here on the S&P 500 is bullish and trading at the highs of the channel after the buyers completed their double up target at the end of today's session. The day started with the bull spike and wedge, which like clockwork here gave the patient buyers a perfect opportunity to buy low after a two-legged correction off the highs before running right back to retest the highs to finish the session. As we finish the session, it appears the bulls are at the same game once again with another bull spike and wedge, which we expect will attempt the same two-legged correction back to support levels before retesting the high and possibly completing the larger measured move target overhead. The bears, just as we talked about on crude oil, really need to be careful because even if they can get a new lower low and they can hold a pullback, they'll likely be finding themselves right back in the correction zone below that 2020 area and of course the low of that bull channel going into tomorrow's session. As you can see, this is very similar to crude oil this evening. We get that bull spike. This, of course, bull turns into a bull spike and wedge, unlike crude oil, which was a bull spike and channel. That bull spike and wedge, what does a wedge tell us? It tells us to buy low using traps, right? Traps meaning below prior swings. Now, of course, we're not looking to simply buy that pullback. We're looking for the more reliable trade, which, of course, will be after sellers try and fail. We see that seller failure. The buyers take full opportunity here and run this thing back up to the high, which, of course, then creates a much larger bull spike and channel. This is very similar to crude oil, right? We run up to the high, and now here we are at the high of that channel. Unlike crude, we didn't get the measured move target filled. This was a pretty lofty measured move, the way this market opened out the gate this morning, right? The measured move target is definitely a long-term objective, but they're going to have to really work hard to get that in one fell swoop. I would imagine we get more of a correction before we get there, but hey, we are coming into Brexit last week, and we've definitely got to be open-minded to anything we're seeing going into tomorrow's session. Now, it looks like the day is finishing with a little bit of the same. Another bull spike and wedge. It's definitely a bull spike, that's for sure, and of course, that's leading into another potential short-term measured move target, which we have up above at that 2036, even 2036 and a quarter. If I had to guess right now, I would say we're probably going to get a rinse and repeat of exactly what we saw earlier today. And that, of course, being a bull spike and wedge. We've completed the objective. Whenever the market completes an objective, you're going to have profit taking, you're going to have bargain hunting, right? Counter trend traders entering the market, and that means right now the buyers are hoping they get a chance here for a two-legged correction back into the correction zone for the next leg higher. Now, with this being, of course, at the highs right now, very similar to what we talked about on crude oil. Option number one, breakout pullback. Just make sure you don't buy into the high of that bull channel, right? Keep it above the high of that bull channel for the breakout pullback. The more reliable trade here for the buyers will be that two-legged correction back to a prior area of support. And then, of course, seller failure to buy right back up to double top, the double up. Very, very common. Whenever the market achieves an objective, profit taking brings price back, right? Counter trend traders bring price back. The lower it goes, the more buyers will be interested to buy that pullback, as you can imagine. And remember, the bears right now have a really difficult time because if they can hold that pullback, now they're going right into the correction zone. And then if they can get below that, well, now they're running right into the low of that spike and channel. So it's very, very challenging to find an open space that's worthy of note for the sellers. Keep in mind, as this price pulls back, you'll get buyers entering the correction zone, buyers entering on the low of the channel, buyers entering the dip at 2008 and a quarter. And of course, don't forget, then we have the correction zone for the big spike and channel. Spike and channel, correction zone back here. Yeah, this is going to be difficult until we can get the bears below this 2000 big round number. Boy, there's going to be nothing more than buyers coming in and trying to buy these dips. I think a lot of bulls right now in the S&P can probably smell that 2100 again, and they're definitely anticipating whether or not it actually happens or not. Remember, we talked about this bloodbath we went through in Brexit. We might find ourselves right back to where we started last Wednesday before the old you-know-what hit the fan, right? So be aware of that. Bull move, if it does go higher, careful buying that high. Look for that breakout pullback with a trap, right, to buy that pullback if it goes higher. Two-legged correction, back to support, back to channel lows, right, back down. Remember, as we pull back, we're looking for sellers to fail. That's going to be the most reliable opportunity here. Failure into strength, strength into pullbacks, and of course pullbacks back up to revisit that high. Pretty good plan there for the S&P. These charts look really good compared to what last night's chart looked like, right? Remember we talked about that last night. Now, gold and euro are definitely still, they're shrugging off a little bit of the Brexit blues here this evening. And today was definitely much better than we saw yesterday. But boy, tomorrow could be another day of chippy, choppy price action. So be careful on gold and the euro, as I've been recommending you guys do that ever since last Wednesday night. Gold is bearish and trying to retest the low after a beautiful trap high, was immediately